Okay, g'day, Rudy here. So this video is dedicated to Pro Medicus, one of Australia's fundies' most loved stocks, and probably yours if you're watching this. And just how you could have traded or invested Pro Medicus, and sort of where it's going. And one of my number one rules is don't fall in love. It's very hard to do. Especially when it's one of your favourite stocks. So that's why I thought I'd do it on Pro Medicus. So just a bit of history. Now, I didn't start the channel until April, May, so I can't claim this publicly. So I just want to go through some of the sort of favourite chart patterns for setting up buys and sells. And so one of the ideal ones is a declining wedge. So you can see it's coming in, and a break of a declining wedge. So anyway, when I started the channel, we were buying gold stocks, not these, but that would be your buy signal with a stop just below here somewhere in case you got it wrong. Okay, so just say you bought that. So now you take the deepest depth of that wedge and you add it to the breakout. That gives you forget about these ones for now. It gives you it's not 100%, but it gives you an expected target for the breakout. Okay. Now this one I did put on when I was having YouTube, because now I just have the Substack channel and would do videos like this sometimes on YouTube. So you've now made a lower high 1, high 2, so it didn't go on with it, and it broke support here, and so we were near our measured move. So on YouTube I put out a sell PME if you've got it, and people who loved it probably did a CSL and just held it all the way down. And yeah, I can understand that. All right, so now we're getting to how do we try and pick a bottom, because there's no change of trend here. There's absolutely no way you could buy that on the way down. But what we did create was a rounded top with a neckline here. Okay, so then with the rounded tops, again, you take the depth of the rounded top and add it to the breakout. So it gives you a target price of somewhere down here. Now, obviously, it's not 100%, but it just gives you a guideline. Okay. So then we're going all the way down. And so we've got our one of these things again, is one of these declining wedges. Okay. So again, I wasn't really following PME at the, but if I had my eyes on it, I probably would have tried to buy that breakout with a stop here. But I didn't. But that's just well, I didn't. Okay, so but it ended up forming. I'm glad I didn't, because what you want ideally in a confirmation, if this happens, is a declining wedge into a rounded bottom. So it broke because sometimes it breaks it and just goes on with it, and like this, it's come back and retested lows, and then made a nice little alley-oop. So we did on the put out on the channel on the Substack, do daily videos. Got a model portfolio. If interested, join us. Got a great community who chat every day about shares and different what they're looking at. Anyway, so we put the buy on here. So now we're in the trade. So we've now formed this rounded bottom. So now we're looking for, and we did a second buy once it broke through this level of resistance here. Okay, so now we're looking for target prices. So we've got, again, take the steepest part of the declining wedge, add it to the breakout, and then we've got a rounded bottom. So take the steepest part, or the depth of the rounded bottom, and add it to the breakout. So we've got two what's the word? Confluencing, is that the word? Points here. We also had pull out the old fib. So the Fibonacci, we had a 50% Fibonacci replacement. And then the candle on the cake, the old shooting star. So, and just say in case you don't believe us. So we're taking profits. So this is what I send out during the day. If take profits PME with a shooting star. I said, or you, because I know we have got a few people who love it, or can wait for stop loss to be triggered if want. Okay, so stop loss being making a new low, so that was your final chance to get out. Okay, so now so that was, let's take it from, a nice little 30%er. And it was easy for me to do that because I don't love the company. Which is why it's the number one golden rule of investing, which is do not fall in love with the stock. And I've got mine that I failed to do. I would find it hard to sell. But anyway, all right. So so what happens now then, Rudy? You smart ass. All right. So now we've formed a inclining wedge. So it's the opposite. Breaks of inclining wedges are bearish. So again, take the depth, the deepest part, and add it to the breakout. So that's giving us a target of around here. If we sort of take the fib, so there's the 50 and the 61.8. Let's get rid of that. And if we go to the weekly, so we've got the weekly 200 moving average. So it's pretty important for PME to hold these levels. And you can see this is Friday. So Friday, 24th of July. Okay, so there's potentially, so if you, so I guess it is something, is there like a trade in there? Because that is a bullish candle. And I know some people love it, but so you'd be looking to buy on a breakout above 167. And if it's going to go on with it, it needs to go on with it, but it probably needs to do like for long term. And so this is your A wave, it needs to go and make a new wave up, make a high. Well, if it takes out that high, then giddy up. But more likely it needs to come up, probably get some resistance there, and then it'll all depend on what happens. Can it make a higher low than this? If not, if it like comes up here, hits some resistance, and then makes a new low that breaks that, then good night. Do not fall in love. Get out. And it's so like, because this is a key support area. Now, if it doesn't hold this area here, I'd just be getting out in case, because you can always buy back. But if it doesn't bounce from here, It's not good news. All right, I just find it interesting looking at charts and patterns. As I said, if you're interested, come join us the Substack, and we go from there. All right, have a good one.